to start with the market. The price of oil right now is trading below where we were pre-Saudi attacks, which wiped off 5% of global oil supplies. Is there just too much oil in the market, or are people not taking into account political and geopolitical risk?
It's a good observation, and indeed, it's a bit puzzling in a way. But first of all, I think it shows how professional and how good the response of Saudi Aramco and the Kingdom has been to sort of protect the reputation of Saudi Aramco as a very reliable supplier. That's outstanding. That was probably not factored into how events like this played out. But then the other thing, Annmarie, I think the market is a little bit anesthetized by trade wars and the glut of shale and everything else, to the point that it has become blasé about geopolitical risk. And I think that is not representative of the real picture.
So if we have prices trading now for Brent about $58 a barrel, did you suspect we're going to continue this slide?
I don't know. It's very hard to make sense out of the market even on the best of days, because it's so much driven by sentiment at this point in time rather than the real strong fundamentals of it. So, of course, we observe the price of oil. It says a lot about trading opportunities and how much cash we actually get into the door tomorrow. But you can't be driven by today's oil price where you have to make long-term investment decisions. So, yeah, we follow it, but we are guided in our long-term strategy by other considerations, like how do you build resilience in our business, and if it's for upstream investments, that basically means what is the lowest possible break-even price that you can get your products to.
Speaking of long-term, I want to ask you about your dividend. You've never cut your dividend since World War II. You're one of the biggest ones, trading around 6.3, 6.4% for yield. And you haven't raised it, though. So how do you entice investors for the future?
Well, indeed, we have a very strong dividend track record. I think our dividend yield is disproportionately high. So I would say that's a buying opportunity, but of course I would say that. I think, we have to get to a point, of course, that we have dividend growth again. And we've been, I think, pretty clear before the summer. We said we will, of course, start raising the dividend again when we have line of sight to completing our buyback program. We do by now, about $15 billion of dividends. I think last 12 months, we've been doing more like $10 billion of buyback. So that's $25 billion of cash returns to shareholders. That's an awful lot. And as we complete the buybacks, therefore also de-risk our capacity to continue to pay the dividend at these levels, we can start thinking of raising it again.
I want to ask you about expanding in the U.S. We have Chevron, Exxon in the Permian, now BP. I know at one point you said shale, it was this expensive. Do you think you're missing out on opportunity there?
I don't think so, to be perfectly honest. Of course, we look at shale, we look at other opportunities inside, outside the U.S., and we basically put our capital to work where we think we can get the best opportunity from it. We don't have mantras like we need to be X in shale or Y in deep water. It has to make sense in terms of critical mass, but the incremental decisions are purely driven by economic and capital discipline. We put a lot of money to work in the U.S. in general. I think, probably still amongst the biggest foreign direct investors, $10 billion a year. That's about 40% of our current investment program. And of course, it's not just shale. A lot of it is deep water. A lot of it's petrochemicals. We put money to work also in our oil products business and increasingly also in power.
Finally, I want to ask you about the speed at which we're seeing the social and political backlash against big oil. I mean, even the Royal Shakespeare Academy dumped BP as a sponsor. We had, of course, Greta Thunberg. Students around the world are protesting. Here in London, we're having protesters. Are you shocked? And what's your response?
Well, first of all, even though there may be objecting against big oil, of course, we are not big oil. We are big energy increasingly. I think, of course, you can see the acceleration of how society is mobilized, which I think is a good thing in general, because in the end, if you want to decarbonize the energy system, it is not about forcing people to take lower carbon supply. It is actually making sure that demand transforms to lower carbon demand. And then we will supply the options that society needs. So we need to change the debate into a more mature debate where suppliers and users of energy jointly figure out how to do things. I think we are in the middle of that transition, where you do get some people to say, well, maybe it's also us as society that needs to transform and not just the suppliers of energy. And I think that will play out. And in the fullness of time, of course, the world has no choice. So I think we will get to a better place, Annmarie.